This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE and Raleigh Goldsboro Recycling, May 21st, 2017. Last week, many commodity prices rose and economic reports were mixed. U.S. steel production dipped slightly, but remains trending up and remains slightly ahead of where it was 2 years ago. Oil rose $2.50 a barrel to $50.53, showing signs of stabilization and remaining above the key $40, which is great for U.S. energy job growth. The oil rig count rose to 720, the highest level in over 2 years, and more than double the 316 low of last year. Yet 720 is still down 55% from the 1609 of about 3 years ago. Iron ore also rose to $250 to $61.50 a metric ton. It's still about double a year ago, but it's still off its recent highs. Scrap ferrous prices were steady, and volumes remained steady as well. As we look to June, many are saying prices could be steady for most grades and slightly down for busheling. Hot-dip galvanized steel remains steady again at $900 a metric ton. With steady to slowly rising demand and stable material prices, we would expect few changes up or down in the weeks to come. Stainless 304 scrap remains steady at 36 cents a pound on an equilibrium of supply and demand and just a slow growth in global economics. The US dollar fell versus other currency to its lowest level since November 2016, which is a result of good global growth and recently what is viewed as US political turmoil and concerns about implementing promised reforms. As has been discussed, by definition, when the US dollar weakens, commodity prices priced in US dollars actually rise. Copper rose 6 cents to $2.57 a pound on mixed global economic news and, as said, the weakening US dollar. Prices this morning are up a penny to about $2.58. The 5-year chart shows some stabilization at its somewhat lower price of a few months ago, but prices are nicely above where they were 18 months ago. And copper inventories remain at about a 12-month high, which will keep downward pressure on these prices. Aluminum rose 2.5 cents to 88 cents, which is now near an almost 2.5-year high, based on the weakening dollar, solid demand, and steady production. Aluminum inventories continue to fall, and once again fell to a new about 9-year low and are now down a staggering 72% from 3.5 years ago, which is keeping upward pressure on aluminum prices. Our first cardboard graph shows clearly what's been going on with other commodities as we see prices are considerably up in recent years. We'll have a better chart on this next week. This chart is now based on a warning from Ray Dalio, the founder of the world's largest hedge fund that manages about $150 billion. He said while economic growth looks good for at least the next 2 years, high levels of debt, high health and pension costs as well, are now increasing social costs, and the political conflicts may make long-term economic stability a problem, as the chart shows. Housing starts have been trending up since 2009, but have come down a bit in recent months to a seasonally adjusted 1.17 million, the weakest in 5 months. The positive news that in 1972, 45 years ago, when the U.S. was much smaller, housing starts were more than double at 2.5 million, so there's great upside here. U.S. industrial production rose a full 1% in April. It was the largest increase since February 2014, as output rebounded for both manufacturing and mining, a great performance that brings stable commodity prices. Initial unemployment claims fell 4,000 to 236,000 to a level almost not seen in 45 years. Again, under 300,000 is a key measure that means growth. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.